Hey traders, welcome back to another very important video. Today in this video, I want to talk about the supply and demand zones and their market structure to show you why the supply zone or a demand zone behaves like it does. So let's go ahead and kick things off by using this supply zone as an example. But before we proceed further, let me tell you about today's sponsor, that is CopyRack. CopyRack is an excellent copy trading platform that allows you to follow the market leaders and copy their trades. So whenever they make profit, you also make a profit. Also, you can look at their trading profiles and trading history to judge their performance in the past. I have put the link to the CopyRack in the description of this video, so please make sure to check it out. So here we can see that there is the formation of this drop supply zone. By the way, if you don't know about the types of supply zone, I already have a video about it on this channel, so please go ahead and watch it first and then come back to this. So here we can see the formation of this drop supply zone. Now if I remove this candle and just focus on these two first candles, that are this drop candle and then this base candle. Now these candles can be categorized as an impulsive wave and a retracement wave. So here we can see that there is the formation of this impulsive wave in the downward direction, that is bearish movement, and then there is this retracement wave. Now after the formation of this retracement, the third candle will decide which way the market is headed, because in the first candle we are sure that the sellers are in control of the market and they're driving the market in the downward direction. Now in the base candle we are seeing the market cooling off, that is there is a retracement. And now the next candle, if the next candle is also impulsive, be it if it's in the upward direction or in the downward direction, that will be very important. So now let me just go ahead and delete these, and if we forward play the market, we can see the next candle is a big bodied bearish candle. Now till this candle, till this base region, we were not sure about the market direction, like which way the market will go. But after the formation of this big bodied bearish candle, we are sure that there is a huge momentum of sellers and institutions are actively taking part in this region here. So we can mark the high and low of this base region as our supply zone. So let me just go ahead and draw our supply zone here, and here we will be using the supply zone in future to place our trade as well. So let me just go ahead and turn its color to red. So now after the formation of this big bodied bearish candle, we have marked our supply zone. If this candle was not big bodied, or if this candle was not decisive, then we would have waited for the formation of next candle. But in this case here, we can see that there is a drop, base, and drop candle. So now we have a supply zone. Now what do? We will place our pending sell order, because since the market bounced really quickly in the downward direction at this price level here, so there are still pending sell orders that are waiting. And once we place our stop loss above the high of this base region and our entry at the low of this base region, we will be putting our first take profit at the break-even point, that is 1-to-1 risk to reward ratio. So now we want to wait for the market to come back to this region to pick the order. Okay, so let me just go ahead and forward play the market. So here, if we see closely, we can see the market pick the orders right here. Now just focus on this candle here, because we'll be talking about this move that happened, but let's focus on this candle first. So here we can see that after touching this base region or our supply zone, the market moved very impulsively in the downward direction. So why did this happen? This happened because, as we saw earlier, that this candle, this formation of this big impulsive candle in the downward direction, denoted that there is a supply in the market. Now once the market comes back to the supply zone, it gets that supply, and what happens? The market goes plumbing down in the downward direction, and you cannot see the buyers anywhere. There is a complete control of sellers, because here a lot of supply was present and the sell orders got triggered once the market price hit this level. And on the very next candle, we can see the market moving in the downward direction. The supply gets kind of exhausted here, but this region is very important, because after our break even is hit, we can take profit with all this region, with whichever take profit trading strategy you will be using according to your risk management. Although there is a special take profit levels trading strategy that we use in our supply and demand method, but that would be out of the scope of this video, because in this video, I mainly want to focus on the market structure behind the supply zone or a demand zone, which makes the market move in the direction it does. So you saw how picking the supply from this region, the market moved very impulsively in the bearish direction. Now let's take another example. And in our next example, let's talk about a demand zone. We can see a formation of this demand zone here. So in this demand zone, we can go ahead and draw this here. So in this demand zone, again, there is the formation of this draw, base, and rally demand zone. Now at supply zone, when market picks the supply, it moves in the downward direction. But at a demand zone, when the market comes back, here we can see the market coming back on this candle, it picks the demand and then it moves in the bullish direction. So here we can see that on this candle, the demand zone was fulfilled, and here we can see the market moving in the bullish direction. So again, this trade would have been in profit. Now you can see the magic of supply and demand zones by understanding its market structure, and now you should be able to understand as well why market reacts or behaves to the supply and demand zones the way it does. And now let me just go ahead and apply our supply and demand indicator. Let me just remove these drawings. So here we can see that without the drawings, we can clearly see the formation of these supply zones and this demand zone on the chart, and that is all done by the supply and demand indicator. If you want to try out the indicator, please check the link in the description as well. I hope you were able to understand the formation of these supply and demand zones. If you have any questions, please comment down below. I would love to answer them. Also, don't forget to like, share, and subscribe. See you in the next video.